right, it's Chris Pre. Welcome to this week's Deal Structure Sunday. I love to always say to you guys, I'm twisting up a bit instead of just doing a regular 3 payday deal. And this one's an important one because we've got different levels, in my opinion, of stacking, we call it, in our community, in the real estate business in general. And that is a student that goes through QLS, even becomes an associate in this case, but then feels like, I got it. And then makes a complete mess because nuances come up, things come up. And it's not like you can do this a la carte. I'm going to give you an example by way of explaining this deal. So this was a past student deal, beautiful home out in Maryland. The student kept not listening, basically. Okay, I could spend an hour on it, but basically he installed the wrong buyer in the house. Didn't do the buyer process through my son Nick or any of the coaches. I was his coach way back then. This was a couple of years ago. He installed the wrong buyer. Then because he installed the wrong buyer, the buyer stopped paying right away. Predictable, okay? Not only did I predict it, but I told him exactly what he's gonna have to do to set the precedent to get that thing wound back to normal, right? He didn't send any letters. He didn't protect himself at all. And what happened was he was on an emotional string with this tenant buyer, big time. And this happens. You know, they give you all the sob stories. They give you all the reasons. We've heard them all. I could write them down before they call and say them. This went on for probably, without her paying, a year plus or minus. And that caused this big home with a $5,000 a month. I'm rounding these numbers for everyone. $5,000 a month monthly mortgage in default now. So picture this. Put the wrong tenant buyer in, didn't listen to guidance, big time. The buyer doesn't pay after a decent deposit, but not for $1 million house. No letters go out. Then he tries to do what he's supposed to do with the seller and pay the mortgage. And then about 5 or 6 months in, he goes, I can't do this anymore. And now, so I get the call, the mortgage is 6 months behind. It's about $30-something thousand. You're going to see the math in a minute. And the only reason I found out, there's a bunch of nuances and lessons in here. The only reason I found out is because in his infinite wisdom, he thought it would be best to tail between legs. My buyer's in the house, not paying me, but she eventually wants to buy this. My seller's pissed off at me. Their mortgage is now behind 6 months and their credit's beat up. And it wasn't beat up when he took the deal on. He bought this home sub 2 in a trust. Now, how did I find out about it? Well, when he bought the home, he needed some money. So we pulled in one of our private investors. It wasn't big. It was like $55,000, maybe a little less, but that was the payout at the end. And the seller's going, well, what the heck? I got this thing's behind. So when we brought that private investor in, the deal was when the tenant buyer cashes it out, they get paid, right? There's a family that I know. It's like, this is important to keep commitments. Well, lo and behold, in his infinite wisdom, he thinks, wait a minute, the buyer's not closing. I can't pay the mortgage and it's behind. I'll forego all my profit. I'll screw the underlying investor and I'll screw Smart Real Estate Coach and I'll deed the house back to the seller. All that would have done is save face for him going forward. Now the seller's already pissed, but save face for him going forward, going, I don't know what to do. Here's your house back. So the seller would have got their house back with 6 months in arrears, with a tenant buyer that's not paying, with a house that needs repairs. I could go on and on. The mistakes go on and on and on. So what do we do? Well, let me go back to what the only reason I found out. The only reason I found out is because it wasn't a trust. And when I brought the private investor to the table, I said, hey, I'm going to have our CPA be the trustee of this land trust so that I know what's going on, right? So he forgot that. And I got an email copied from him to my CPA saying, hey, just sign this deed. I'm sending the house back to the seller. And I went, whoa, stop. All you're doing is protecting your butt there. I'll see what I can do here. So here's what we did. We took that trust, which had a beneficiary of his LLC and had my CPA as the trustee, okay? I'm going to draw on this a little bit for you now. We did that. We kept the trust in place. My attorney immediately, because they know what they're doing, is so important for you to have the right attorney in place. And we do have them at smartrealestatecoach.com/attorney. They're in 32 states. If your state's not listed, don't join that membership that you can join. So here's what we did. We had him consent. We had him to these changes I'm telling you about. We had him release liability totally. Because when this is all said and done, when you see what we're doing here, could the tenant buyer maybe have some recourse with him? Sure. Could the seller have some recourse with him? Maybe a little bit. I don't know, because I fixed it in a minute. I'll show you. We changed the beneficiary to one of our LLCs, and we kept the trustee in place. Let me change that. We changed the beneficiary to one of our LLCs. And we actually changed the trustee to our office manager, so we didn't have to bug our CPA. Could have left them in there. Okay. Now, two offers here, as you can see. Going on the left, we can sell it, and going on the right, we can evict. What should we do if we don't know if we have a buyer yet? Meanwhile, in the background, there's this realtor calling with offers. Made an offer for $1 million cash. I know selling it as is with a tenant in place is dramatically better for us than trying to evict a tenant, pay 4 more months of a mortgage of $5,000, maybe deal with some repairs, et cetera, et cetera, et cetera. So I prefer to sell it as is. So I kept talking to the realtor on the side. Offer came in, it said cash, and then they wanted financing. I said, no, thank you. Another offer came in. I said, look, I already started the eviction process. Your offer now has to go from $1 million to $1,005,000. I just sent a retainer check to my attorney to evict. So we got both these angles to work at the exact same time. It's important that you know to pick up the phone and call a local expert with the eviction. What did we do? We had our attorney, who I just raved about, call and search for us, then explain to that attorney what was going on, show them all our paperwork, because attorney to attorney, it's a lot different and it's a lot better, frankly, than me doing it. So after our law firm explained it to the local attorney, he said, got it, I know what I got to do. So he had us contact a contractor, get over there to make sure we show good faith that we were checking the house out. We sent a letter that we're going to change the locks, all the things that in Maryland he said we should do. We don't do them like that in Mass. So I said, just tell us what to do. And then our office manager documents every piece of it in case we have to get to court or get to the eviction. Meanwhile, a third offer comes in on the property for $1.5 million, truly a cash offer, wired a non-refundable $25,000 deposit to our attorney. And so we know that's locked up. Now, this deal is supposed to close any day now, a full disclosure. So I'm talking about it in 2 or 3 days in advance. If I jinx myself and it doesn't close, we're going to go with this route. We're going to go with the eviction route. It's okay. And then we'll put on the market, because guess what? I called a local realtor in the area who owns a brokerage, is the broker owner, and is also a high 6 associate in our community. So I have a high amount of trust for her, Lindsay. Lindsay went into the CMA and said, as is 1-2-ish. We also have a past appraisal, which frankly, I think was padded a little bit from a private lender at 1.4. So I know 1 million's a slam dunk for someone to come in there, deal with the eviction, do some repairs, and get this house sold. It's gorgeous. And so that's kind of the mess we're in, right? Now, we made the seller's life better because we caught up the arrears, $30-something thousand. We helped everyone by catching up HOA of about $4,000. They just didn't pay things, and that's going to be a headache. So those were all done. So here's what the math looks like. They had about $34,000 in arrears, as you can see. $4,500 or so HOA. We paid that. We paid the arrears. We did that from a line of credit. We did the $4,500 from just our cash flow. And then we had to send a $2,000 retainer to the eviction attorney. And I upped the offer $5,000 to cover that, as I said earlier. So after the arrears are paid, owed to the bank is about $760,000. I'm within $1,000. Again, I'm rounding these for the illustration of all the things that can happen. And you just have to know who to pivot with and who to talk with. And that's us in the community. The private investor has to get paid back from way back when I brought him to the table on behalf of the student. And then the expenses above there, the 34, the 4, and the 2, about $40,000. So we're into this thing for about $855.5. So before closing costs, transfer tax, or whatever is in that state, I'll review it. But before that, we have a bona fide offer that's closing any day now, and we're going to net after all the expenses and before transfer tax, almost $150,000. Now, what's important about this, other than, hey, just pick up the phone and freaking call us and we'll tell you what to do, and just do that. Don't change it. Okay. From our experience, we can usually get you through it. Pivots happen, but there was money here left on the table and he was about to throw all that away. And the timing of this was important because in the month of April, all this took place. The next payment is due in May. I'm sitting filming this for you on May 22nd. It should close this week, in which case there was no other mortgage payment that had to be made. And everyone's happy. Everyone, the investors, tons of money on the table. The tenant buyer probably is doing something with them on the side. Who knows? I'm assuming that. And then the seller's credit's fixed and the loan's paid off, right? It's a win-win all around. Now, if the closing doesn't go this week, they lose the $25,000 deposit. And therefore I have 5 months of mortgage payments that I can handle while I get the tenant. I say our company gets the tenant buyer out of that house and then sells it for closer to 1,250 probably. So if you have questions on this one, it's super important that you send me an email, chris@smartrealestatecoach.com. But I'll tell you what, we are doing a full day of deals. And we call it, we've been doing it for several years, Summer of Deals. It's on Friday, June 16th. February wouldn't be summer. On Friday, June 16th, we are doing Summer of Deals, and you are going to see deal structures and things like this. And who knows, I may bring this one in and talk about it again all day. It's a virtual event. So it's something you can and should be at. Every single one of you Wicked Smart viewers should be there. Just go to summerofdeals.com. And while you're at it, check out the QLS live event that's coming up in September, because that's qlslive.com. So that one's live. June 16th is virtual. No reason you can't be there. Buckle in for the day. We're going to have a great day of deal structuring. Make it an outstanding day.